European stock markets are trading higher this morning with the UK's FTSE 100 index currently up around about 55 points. The DAX in Germany doing very well, up around about 62 points, and the Euro Stoxx 50 index higher by around about 21 points at the moment. In the currency space, the euro is gaining ground, and when it comes to other currencies like the dollar, it's stable at the moment. Core government bonds, UK gilts and German bonds are tracking a little higher. And in the commodity space, we've got gold, which is currently up about $3, and oil prices also tracking a little higher. Good morning, I'm Ishaq Siddiqi, and welcome to your daily market bite. It is Friday, it's the payrolls day. It is, of course, the best day of the week because the weekend's here, nearly. And like I said, payrolls, big number out from the US economy later on this afternoon. The monthly jobs data is one of the biggest indicators of the health of the US economy. But this time around, there's a bit more importance on it for the reason that it will give us a bit of an idea of how the Fed is going to construct the pace of unwinding QE, which they have started this month. Now, going back to the overnight sessions, shares in US markets rallied higher, and that was generally on the back of some positive sentiment ahead of today's payrolls numbers. Yesterday we had jobless claims, which were better than expected. It showed another dip, and that was a day after, on Wednesday, where we had the ADP report, which is generally seen as a precursor to the payrolls, which again smashed the doors and were far ahead of expectations, suggesting that we are going to be in for a strong number today. Expectations are currently around about 196,000 jobs to be created by the US economy in the last month of 2013, and the unemployment rate to stay steady at 7%. Now we have to remember, between November and December, the unemployment rate dropped from 7.3% to 7%, and that was one of the reasons, the key drivers behind why the Federal Reserve started the initiation of tapering of QE. Now, what we're expecting today is pretty much a number which is in line with that. A stronger number would suggest that the Federal Reserve can justify the reduction of QE. What markets really want to know is the pace. How quickly or how slowly will the Fed react to the improvement in the economic indicators in the US, particularly the labor market. It is one of the big emphasis that the Fed has put on when it comes to adjusting their monetary policies and further thresholds. We know that the Fed has put out forward guidance. It's not as strong as people expected, with few thresholds, but with Janet Yellen coming in, people are hopeful that we may get more of a stronger communication and something a bit more transparent from the Fed. We do know that interest rates will remain for record lows for the foreseeable future. Back onto Europe and over on our shores, yesterday we had the ECB meeting in which the central bank held steady on rates, which was expected, although there were some people in the market who did think that the ECB could cut the refi rate. However, they did not. Mario Draghi in a press conference emphasized again that monetary policy will remain accommodative, and at the same time he emphasized on a stronger forward guidance. At the moment, times are not as drastic as they could be to warrant a rate cut or negative deposit rates, or even another LTR operation. Two measures seem to be that are seen as extremes, and we would really have to only wait for the Eurozone economy to really start deteriorating at a quick pace before we see the ECB stimulate the Eurozone economy through those unorthodox measures. Today we've had the Eurozone GDP figure, which is pretty much in line with expectations. The Eurozone is growing, but very slowly. Nothing to get excited about, and there is the possibility that we may possibly see another recession if we continue seeing a contraction in countries like Italy and France, particularly France. France is a big worry for the market. In terms of economic data out from the UK, it hasn't been that great. Manufacturing industrial production, well, mostly industrial output, was lower than expected, putting pressure on sterling. Again, doesn't take away from the fact that the UK economy is showing signs of recovery, but nonetheless not a good report. It does mean that markets will be paying close attention to industrial production next month. Perhaps this was seen as a bit of a let up after the strong growth that we've had in the industrial production activity across the UK sectors for the last 6 months of 2013. Other stuff to look out for today is, of course, the numbers out from the US, and later we also have something on the construction industry. When it comes to what we're looking at for next week, got corporate earnings in full swing from the US economy. US corporate America, it was unofficially kicked off by Alcoa overnight. They reported weak numbers, setting the tone for a downbeat start. But then again, Alcoa is no longer in the Dow Industrials. It has been downgraded. It was downgraded last year, so it doesn't have that same sort of clout that it used to. Nonetheless, it has kicked off on a sour note, and we'll be watching big bank earnings from the likes of JP Morgan, Citi Group, and Morgan Stanley next week to give us more of an indication of how the US economy is faring from the corporate perspective. That is all for your daily market bio. Thanks for watching and have a lovely weekend.